Morning everybody, it's Chris from Serene Education with the 4 Majors Notes update for the 1st of June 2012. Going to be looking at the Euro as well as the 3 other majors for this morning session. And just be aware, it's the first Friday of a new month, so today we should have the non-farm employment change figures out this afternoon, which is quite a very important news announcement for the US session. So be aware of that. A lot of news out today. We have some Italian manufacturing PMI results for Euro at 8:45 GMT this morning. We have the European unemployment rates at 10 AM GMT this morning. Then we have Sterling's manufacturing PMI results, and we go into this afternoon session. We have the non-farm unemployment change figures at 1:30 GMT, followed by the unemployment change or unemployment rate figures also at 1:30 standard time or GMT time. And then we have average hourly earning month to month, core PCE price, personal spending month to month, and ISM manufacturing PMI results this afternoon for the US session. So there's quite a lot of US data to come through, and that should reflect on price action today. What it will do though is non-farm payroll figures, very important, probably the most important piece of information that comes out on the first Friday of each new month. Just be aware of that, make a note. Very important. Let's have a look and see what Euro has been doing. Yesterday in particular, after a lot of negative sentiment to the downside, a hesitation, and that hesitation coming around in prior support and resistance level. If I had to take the previous high here, going back in October of last year, to this bounce in January of this year, to the prior high that we had here going through February, you'll notice that the 61.8 at 1265 or 1250 was breached, and the 50% at 1265 was at prior support and resistance level, that major support and resistance level on the fib extension. Okay, so that's the 1265 mark. I'm just going to make that nice and black so you can see it. Now if you look at just recently, we had this high here and to the downside on the bounce at 1265, then a bounce up to the 23.6 mark, just short of 38.2, and then progression to the downside. Now you can see a lot of hesitation going to this inside. You could see these fib extensions or retracement figures compared to the extension pretty much consolidating here quite nicely. Now trading below 61.8, and we're in this area of there's nothing here to stop price moving lower. Primarily this is pretty much after going through this little hesitation here that below the 1265 you've seen this pullback and then the continuation, and in doing so now we're trading in this free range area, and the next major support and resistance level is going to be down here at 12,200, which coincides with our weekly. I can bring that up for you to show you our weekly bounce and consolidation area that goes way back to 2006. We're very negative in this pair overall. You can see just recently that 1265, very strong support and resistance level, and now we're heading towards this all-time low here. First mark at 12,200, and the second target at the low end of here, which takes us back to the 100% here at roughly the 1185 mark, 119 at the December low in June. So notice massive breakout on the weekly candle last week, and this week pretty much putting back to the underside of that, finding resistance and continuing. So it's a typical breakout, pullback, and then the continuation over the past couple of days, heading towards those lows here at the 12,200 mark. So what could we see today? Well, non-farm payroll today this afternoon, they're expecting a higher figure for non-farm unemployment change. Previous figure was 115. They're expecting 151k. So if that figure comes out higher than 151k, then you're going to see it being fantastic for the US market, because it means that they've made, well, there is 151 plus or 151,000 plus more jobs available. Now expecting a hike. All you have to do is just look at the prior figure on that just to see what the figure was for the prior month. In this case it was they forecasted, they were up 154, they expected 173 last month, and it came at 115, so very negative for the US currency pair. And then they're expecting for it to hike up today. So if we get price moving higher than the forecast, then you're definitely going to see the US dollar actually gaining momentum. And we could see, if that was the case, hence the reason why yesterday's doji started to come out of play. This is a bit of a spinning top here after this massive downside, consolidating now, going into this this important day now because of the first month of the first Friday of the month. You'll find that people closing their long or shorting opportunities here. They moves to the downside in this case and consolidating the stuff as they go into this important day, and we could see price heading up towards a 61.8 consolidation if the news is favorable for the if the news is unfavorable. We could see euro gaining a bit of strength here to the upside, heading towards that 12.4500 mark. If, however, the news on the US session is negative, positive, apologies, then you're going to see the euro revert to the downside and heading back towards that 12.200 mark that is just below us here, some 150 pips away. Onto sterling, massive fall over the past month. May has been a very negative month for sterling. We've seen 100, what's that, 100, 200, 300, 400, 500, 600, 700, 800, 850 pips worth of loss or negative sentiment on this candle to the downside. Very negative month for sterling. All this upside movement here right throughout the whole of this year, from January all the way up to these highs we saw in April, pretty much all been taken back now as we failed to rally above the 16,300 mark in the first part of May. Since then, it's just been steadily falling, and in doing so, breaking through Fib retracement levels to the downside. 23.6, the 38.2, 50, a bit of hesitation underside of the institution moving average, and since then really dropping, 61.8, hesitation yet again, and then breaking lower, heading towards that 78.6, which is just tested. I can just put that in so you guys can see it, the last Fib extension before we head towards the 100. Yeah, hesitation at the 78.6, and now massive breakout to the downside yesterday, taking it lower, and now we really are on par to hit these areas here at 1525 that we saw back in January of this year. So if anything, we could see a bit of hesitation now, heading into the first weekend of a new month. Non-farm payroll, as I mentioned, is out today, and if those figures of the US market do come out positive or higher than the expected forecast, then we could see sterling continue to fall to the downside. If they're not, and we see a lower figure than the forecast, then we could see sterling do a bit of a rally this for today in particular, back up towards this 78.6 mark here at the 15,700 mark. So look at your intraday data. Nikki and I don't choose to trade the non-farm payroll figures because of the volatility out there, or the speculative volatility out there. It becomes very manic, very hectic, a lot of wicks, and we choose not to trade that. So what we do is we have a long weekend. It's going to be an even long weekend because of the Queen Jubilee this weekend, and yeah, the market can have today and play with it and work out what exactly it is that they want to do before we reapproach the market next week with a fresh view on what market sentiment is taking or driving the price, and then we'll trade that. Next up is Swissy. Here again, same as the euro and sterling in particular. Price just currently broke a 960 area prior resistance level. A lot of momentum to the upside on the May month, moving higher. All the moving average and the CTC in particular, the strategy template really showing us momentum to the upside. 50% heading into that prior resistance level here at 960, and a nice clean break through it just recently, taking it higher, and then price action really finding support in that and entering higher over the past couple of days. Tentative trading yesterday, positive upside still in favor of this, more buying sentiment than shorting sentiment, even though on an indecision spinning top. And as we go into this first weekend of the new month, the non-farm payroll figures today will be something to watch, especially for the US Swiss franc pair as well as the US Japanese yen in particular. So if it stays above this now, as long as it maintains above 960, then ultimately long term we should still be looking for further sentiment to the upside for this pair. All the moving edge below price, everything just stacks up positive sentiment long term for the US dollar Swiss franc, and as long as it maintains above the 61.8, most importantly above the 60, but if we can stay above 61.8 short term, consolidation in around this area here at 965. We could see price moving higher. I think the 78.6 area has just been tested. Yes, there we go. 78.6 fib extension is in play as we speak, so a nice break and close above that for the new month, either today or Monday, would definitely show signals that we should be looking for 100% extension up here as our next potential target long term. That's just pulling out. You can see here at the 98, just below the 98.30 or 50 here would be our ultimate target for this pair, as we'd see 100% extension of the initial extension here. So this is the first part, little pullback, and then this over here we expect to see 100% extension of the initial move to the upside. So all in favor of further gains for this pair, as long as the 960 still stays below price, and if it can stay above the 61.8 here at 965, then we should see a positive bounce quite quickly to the upside. So if you take this little short pullback here just before the break of 960 here, you can see that we can hang on to the highs over here at the 23.6. So you take this low to this current high here at the resistance level, just show you how you can really break it down for a short-term intraday trade. And 23.6 here at the 970. If you can see a nice psychological bounce here, US data figures come out today positive. You can see a nice little bounce in around this area here to the upside, retackling 975 with overall the 100% to be targeted. The last pair of the day, the US dollar Japanese yen. This pair has really been pulling back over the last couple of months, especially through right from the mid-March. You can see lower swings dictating downside momentum for this pair, and we thought price failed to break over 84, a price support and resistance level in the past. 80, another one we broke through on the way up towards the 8400 mark. That we were hoping to see price actually finding support on. Recently that failed to stack up. The moment it got below the 80, it consolidated for quite some time in around this area, undecisive, true decision. So we wanted the market to give us a clear decisive break, confirmation signal, and it came in this bearish candle, here in the, I think, the 15th of May, engulfing all of this indecision at a major support and resistance level. CTC at that time had really gone red across the board, so we're looking for nothing more than shorting opportunities. Sure enough, we got it, the pullback, and then now we've seen the extension. The actual, it's just released, breakout, consolidation back to the underside of 80, and then we've headed low again, breaking the 61.8. There we go, breaking the 61.8 here at 7900. Okay, this is the fib retracement back there, and then in this candle yesterday, taking us lower than the institution moving average, which is a very negative signal for this pair, for any pair. If it's trading below the institution, then it's trading at its lowest point over 200 periods, in this case days. And now our next target would be the area around here at 77.70, roughly the 78.6 fib extension to the downside. Break below that, we're back in this consolidative range that we see in price, or this pair trading in since June, July of last year. You can see how between the 78 and the lows at 75.50, where we saw the Japanese government intervening, price was consolidating in this consolidative range. So really making an effort to get back down towards these levels, which is not good. So if anything, we see some really positive figures out of the US today. We could see this hemorrhage on the US dollar coming to an end for the time being. If the news announcement on that non-farm or the unemployment figures is negative for the US dollar, then we're going to see this downside trend maintain this momentum to the downside, and we should be definitely heading towards the 78.6. So today, very, very important in the non-farm for US market. It could really give us an idea of where price is likely to head to for the remainder of next week, for the new week of June. So very, very important to make note of it. So if you want to, as long as price maintains below the institution moving average and below the 7900 overall, then ultimately sentiment is still negative. We're making lower swings, dictating downside movements, and as long as that's in play, then we should be looking for nothing more than shorting opportunities. That'll be it for this week, guys. Hope you had a fantastic trading week. Been a lot of negative sentiments. A lot of you should have made some decent profits this week, and long may it continue. I'll see you next week. Have a fantastic trading day, and weekend, and I'll see you Monday morning nice and early. Until then, trade serenely.